Are you tired of jumping from one strategy to another without seeing results? My name is Forex, aka no signal, no entry. Have you ever missed a perfect entry at your point of interest and wondered how to still catch the move? In today's video, I'm going to show you exactly how to trade continuation setup even after a missed entry. We actually got this request from one of our YouTube subscribers few weeks ago who requested for a video tutorial on how to trade continuation setups even after a missed entry. In this video, you will learn how to identify continuation structures, spot key retracement zones, and confidently enter the trade with precision. Whether you are a beginner trader or still struggling to find consistent setups, this strategy will help you to trade smarter, not harder. Stay tuned to the end of this video because I will share bonus tips on how to avoid common mistakes most beginner traders make. If that sounds good, don't forget to like, subscribe, and turn on the notification bell so you never miss another powerful Forex trading tutorial designed to help beginners become consistently profitable. And I will see you after the intro. Before I walk you guys through the continuation system, how to use the continuation system to execute your trade whenever you miss your entry at a point of interest. Before that, I will show you how to run a top-down market analysis. As a professional price action trader, the first thing you must establish in the market is trend. Without the trend, you are just gambling, because if you establish the trend in the market, it will guide you to take a well-informed decision, right? Trend is your friend. You must not trade against the trend. And this is the first question you must solve before you even take sides in the market, whether you want to sell or you want to buy. If you look at the chart of gold right now, price action was trending up some time ago before the sellers invalidated the structure to the downside. Now I'm going to break it down. If you look at the structure when the price was trending, price formed lower high here, then created a new lower low, then price invalidated the structure to create a new higher high, higher low, higher high, higher low, then higher high. Where was the last higher low that the price formed during the bullish trend? This place serves as the last higher low, which is the major swing support zone. Let me write it out. Support zone. You can also refer to it as higher low. Let me change the font size. Now, this higher low right here, when the price action created this higher low here, then the major supports, the price bought, right? And at the end of this bullish market, price created a pattern that represents the presence of sellers, which was this equal high. Price created a new higher high, then sold to create a new support, then price bought again to create equal high. If you don't want to call it equal high, you can also call it double top pattern. Double top pattern is a chart pattern system that represents presence of sellers in the market. It's a bearish reversal chart pattern system. Before I forget, if there's any specific challenge you are facing in your trading journey, whether it's understanding a strategy, how to manage your risk, or even building a trading psychology, let us know in the comment section and we will make sure to cover it in the future content. And also, if you are still finding it difficult to achieve consistent profit in your trading journey, this is the perfect time to take action. We have created a free community on Telegram where you get access to weekly profitable signals. It doesn't cost you anything to join. Just click the link below this video description and become part of a supportive trading community that is focused on helping you grown and finally see consistent results. Whenever you come across this pattern at the end of an uptrend market, it's a sign that sellers want to change the direction of the market. The formation of this double top signify every presence of sellers right now. When sellers broke the neckline of the double top here, price sold down massively and invalidated the major swing higher low here, or the major swing support zone. And the rule says when the price action is trending, the last higher low must be protected. Price must not break or close below the last higher low, which is the last swing higher low. In a situation whereby price closed below the last higher low, that is change of structure to the downside, right? And if we extend this swing support to the future, you can see that sellers invalidated it to downside, right? So this place becomes the protected high that buyers must not invalidate, because we are now back in a downtrend. Why are we back in a downtrend? The long-term uptrend line has also been invalidated to the downside, and the price action invalidated the swing major support or the swing higher low here. Price closed below it, right? So this is no longer a support anymore because it has been invalidated. So we can call it broken support, right? This is a broken support. Let me change the font size a little bit. This is a broken support, right? This zone becomes the recent swing high because the price action right now is bearish. Now the buyers created a new support zone here, and they bought from here to the upper side to retest the last swing broken support, which was the last higher low here during the bullish market condition. So, and when the price action retested it, the sellers sold again and they invalidated this support zone here. It is no longer support anymore because it has been invalidated. It is now a swing broken support zone. So we can call it swing lower low. Right now, this is swing lower low because we are now back in a bearish market condition. Now this place becomes our recent swing lower high that must be protected. Swing lower high. Price must not close above this swing lower high, right? So this place becomes our protected high during this bearish market condition. So we've been able to solve the first problem, which is to identify the trend. We are using gold markets for this analysis, and the answer to the question is bearish market, right? This is a bearish market. That shows that sellers are in charge of the market. The next step is to establish our trend by connecting point A to point B. And where is our point A? This place is our point A. This zone here, while this place is our point B. We want to connect the 2 points together to establish our valid trend line. There are different ways to establish or draw your trend line, but I love to draw or to use my trend line as a zone in the market. One of the previous video I posted sometimes ago, I explained that trend line can also serve as support and also resistance, right? So I love to use trend line as a zone in the market. Before I forget, if there's any specific challenge you're facing in your trading journey, whether it's understanding a strategy, how to manage your risk, or even building a trading psychology, let us know in the comment section and we will make sure to cover it in the future content. Whenever I'm establishing my trend line, I love to cover both the wick of the candlestick and the body, right? Both the wick of the candlestick and the body. So I'm connecting these 2 points together right now. I'm starting from here to this zone. Then I'm going to extend it to the body of the candlestick. The purpose of using trend line as a zone is to ensure multiple touches on the trend line. And the principle of trend line says whenever the price action is coming back, the third time to mitigate the trend line, you should expect a reaction or you should look for opportunity whenever the price action comes back to mitigate the trend line third time. First touch around the zone, we have second touch around the zone. In the future, we are expecting the price action to mitigate the trend line the third time so that we can look for sell opportunity. We're about to enter the session whereby I will show you how to use the continuation setup to execute your position whenever you mix your entry at the PO high. If you look at this structure right now, we have a solid bearish structure because we have our swing major high here to the swing major lower low, swing major lower high, then swing major lower low. Let me bring it out. We have a solid bearish market structure, and during bearish market structure, you must do something. Always protect your last lower high. Price must not close or trade above this last lower high. So where is our last lower high here? We have our last lower high around this zone. That is our swing major lower high. The next step is to exercise a lot of patience and wait for price action to mitigate the trend line the third time. This is 4 hours time frame on gold market, and I love to use 4 hours time frame for trend to establish my trend, while 15-minute time frame for entry, right? So we're heading to the continuation system right now. So let's scale down to our entry time frame, which is 15-minute time frame. Now let's play the price action and exercise a lot of patience. We need to wait for price to mitigate our trend line here. Let me change the color to yellow or red. Let me use color red for this color red. So we have to exercise a lot of patience. The hour has come right now where I will show you the continuation system, how to use it to execute your position whenever you miss your entry at a point of interest. And before that, let me ship in this. Market is structured in a way to take money from the impatient trader and give it to the patient trader. So if you are not making money right now, it shows that you are still on the league side of impatient traders. So you have to do a window transfer and join the league of patient traders so that you can start making money in the market. On our entry time frame right now, which is 15-minute time frame, we have to exercise a lot of patience and wait for price to mitigate our zone. Our rule is no entry, no signal. We must ensure that the price mitigate the trend line the third time, then we watch out for our entry system. As you all know, I love to use what I call counter trend line breakouts, right? I love to use counter trend line breakout. I also call it CTB. So I draw my trend line, then connect the 2 points together. So this is my entry zone, my PO high. The purpose of the counter trend line breakout is to guide me or protect me so that I will not enter the wrong setup. And the rule I'm setting for myself is that if the price action continue trading above this counter trend line, I'm not going to execute my position, right? I will wait for a bearish candlestick to close below the counter trend line to break it to the downside. Then I will use the bearish candlestick as my entry. So let's see what the price action will offer us. Finally, we have a major breakout of the counter trend line. So this way is going to be our entry. This is the part where I'm going to explain the request we got from one of our subscribers on YouTube who requested for a video tutorial on how to use continuation system to execute a position whenever you miss your entry at a P or high. For instance, let's assume you are not in front of your system watching the market while the price action mitigated the PO high, then the price or the bearish candlestick broke the counter trend line, right? And this place supposed to be the first entry, the perfect sniper entry, but you were not watching the market and eventually you miss the entry. And these are the mistakes a lot of Forex beginners they make. While the price action is already running like in profit and you realize that the price action has left you behind. And most beginners traders makes this mistake. They don't want to exercise a lot of patience and wait for continuation pattern system to form so that they can join the trend. But they will not wait for confirmation, extra confluences that will guide them to execute. They will just jump, execute that sell position. Where you're supposed to risk like 20 pips using your first entry zone and you just jump blindly. Let's assume you are executing trade around this zone here. Look at the stop loss you'll be using. Look at the stop loss. You'll be using a very wide stop loss range compared to this because you've already missed the entry. So to avoid this is what you should do. You should always use continuation system to join a missed trade opportunity. Let me break it down. There are two phases in the market. The first one is expansion phase. The second one is a pullback or retracement phase. And the continuation after a pullback phase is expansion phase. As a professional price action trader, you are not supposed to jump on a trade while the trade is already expanding during continuation phase. This is a retracement phase. This is a continuation phase, or you can also call it expansion phase. You are not supposed to jump on a trade when the trade is already expanding, giving continuation system. So you are supposed to jump on a trade at the end of the retracement phase. You allow the trade to retrace. Then at the end of the pullback phase or retracement phase, you jump on the trade. Because if you enter your setup at the end of a pullback phase, you are going to get a well discount price zone for you to short your position. If you did not execute your position here and you execute here while the trade is already expanding, you are going to use a wide stop loss zone. Whenever you miss a trade at the end of a pullback phase, just wait for the trade to expand, right? After the expansion phase, after the continuation phase, then wait for another retracement phase, then you now join again. Don't execute your missed trade or your missed opportunity during expansion phase or during continuation phase, because after expansion or continuation phase, price will always retrace or give you a pullback phase. Wait for the pullback to end, then you execute at the end of the pullback phase. If you look at this example right now, this place was supposed to be our perfect entry zone, but we were not watching the market. We have missed the entry while the price action is expanding, and we are not supposed to execute when the price action is expanding. This was a retracement phase. Then at the end of the retracement phase, price is now expanding. So we have to wait for this expansion phase or continuation phase to end. Then exercise a lot of patience for a new retracement phase. Then we will now join the trend. So let's play the candlestick right now and wait for a proper retracement phase so that we can execute our trade. Let's establish another counter trend line breakout. As you all know, I love to use my trend line as a zone. So this is my trend line right now. I have first touch here, second touch here, third touch here, then fourth touch around this zone here. So there are 4 touches on the trend line right now, which is counter trend line. I love to call it CTB all the time. The next step is to exercise a lot of patience. I have to wait for a bearish candlestick to close below this counter trend line, right? Imagine I'm not a patient trader. I just want to enter the trade blindly, right? Let's assume I enter a trade here, then I put my stop loss above here. What would have happened? I would have lost this trade because I was not patient. You have to be a patient trader and follow your entry criteria, your rules. So my rule is I must wait for price to break my counter trend line. If the price action is still trading above this counter trend line, I'm not going to execute my position because I'm trying to jump on a missed trade by waiting for another pullback or a retracement phase to break my counter trend line. Until a bearish candlestick break or invalidate this counter trend line, that is when I'm going to execute my position. Let's play the candlestick and see what the price action will offer us at the end of the day, whether the bearish candlestick will break our counter trend line. Finally, we have a major breakout, right? So this place is going to be our entry price zone because we've seen our entry criteria and the final confirmation. So we are placing our stop loss above here. Then we target twice of our risk to reward because this is a day trading system. It's not a swing trading system. As a day trader, you are not supposed to waste much time in the market. So I'm only targeting twice of my risk to reward. So let's play the candlestick and see what the price action will offer us on this trade. Finally, price action smashed our take profit zone. That is the end of today's video. If the information you've learned so far has added value to your trading journey, inspired you or blessed you in any way, we would truly appreciate your support for the channel. The best way to do that is by simply clicking the like, subscribe, and turn on the notification button, which tells YouTube this content is helpful and pushes it out to more traders who might need it. Also, don't forget to stay connected with us and continue receiving practical tips, strategy, and insight that can make a real difference in your trading results. Your engagement goes a long way in keeping this channel alive and allow us to keep creating valuable content for you and other traders around the world. See you next time.